In the world of finance, everyone's always looking for an edge. Well, today we're diving into a technology that might just be the biggest edge of them all, machine learning. We're going to break down how it's completely rewriting the rules for quantitative investment.
So let's just jump right in with the question that's really driving this whole thing. For decades, finance has been this mix of human gut feelings and some pretty smart math. But what if you could just sidestep all that human bias and see the raw, hidden patterns in the market? That's the incredible promise we're exploring today.
Okay, so what is machine learning, really? At its core, it's a tool for pattern recognition on a massive scale, a scale we've just never had before. It sifts through mountains of data to find connections that are totally invisible to us. And here's the really wild part. It does this without a theory. It doesn't need a person to tell it what to look for. Its greatest strength is finding those connections our own minds would never even think to make.
That brings up a really fair question, though. I mean, we've had quantitative models for a long time, right? So what's the big deal now? Is this actually something new and revolutionary, or is it just, the next small step?
And this is where you really see the huge shift in thinking. The traditional way, on the left, it always starts with a person's idea, an economic theory about how the market should behave. Then you go find data to test it. Machine learning, on the right, completely flips that script. It starts with the data itself and finds the patterns. No human theory needed. In fact, that lack of a starting theory, that's a feature, not a bug.
Here's a fantastic way to picture this. A traditional model looks at a company's quarterly report. That's the finished painting. Machine learning, on the other hand, sees every single individual pixel that makes up that painting. Every credit card swipe, every click on a website, every tiny piece of data. We're going from the big picture summary right down to the source code of what's actually happening.
All right, so we get what it is, and we get why it's a potential game changer. But how does this thing actually, learn? What are the fundamental pieces that make it all work?
To get how it learns, we got to know two key terms. First, you have features. Just think of these as all your inputs, the raw data points you feed the model, like PE ratios or momentum signals. And then you have the label. That's just the answer you're trying to predict, like what a stock's return is going to be next month.
So the most common type of machine learning is supervised learning, and it uses both of those. You basically give the algorithm a massive historical data set where all the features are already connected to the right labels. It's like giving it a history textbook that also has all the answers in the back. Its job is to work backwards and figure out the rules.
Then you've got the total opposite, unsupervised learning. This time, you just dump a giant pile of data on the machine with no labels, no answer key, nothing. The algorithm is in pure discovery mode. Its only job is to find hidden groups and structures all by itself. It's less about predicting a specific thing and more about understanding the hidden grammar of the data. And the third main flavor is reinforcement learning, which is a whole different beast. This is all about learning by doing, trial and error. You create a little agent in a simulation with one goal, like make as much money as possible, and you give it a reward for good moves and a penalty for bad ones. After millions and millions of tries, it literally teaches itself the best strategy.
I mean, this all sounds absolutely incredible, right? But a lot of these core ideas have been around for a while. So why is this all exploding now? What were the key pieces of tech that finally unlocked the door and made this practical for finance?
It really came down to a perfect storm of three things hitting all at once. First, we finally have cheap, massive computing power, thanks to things like GPUs. Second, we have this absolute explosion of new kinds of data to feed these hungry models. And third, amazing open source software put these powerful tools into the hands of developers everywhere.
But honestly, out of those three, the real fuel for this whole revolution has been alternative data. We're talking about everything that isn't a typical financial report. Satellite photos of parking lots, anonymized credit card receipts, web traffic data. This is that atomic, pixel-level data we were talking about earlier. And don't get it twisted, this is a massive business. The hunt for this new kind of data is driving huge investments. In fact, spending on alternative data by fund managers was expected to soar past $7 billion back in 2020. This is not some little niche trend. This is the new arms race on Wall Street.
Okay, let's try to pull all this together. We've got these super powerful models, incredible new data, and basically infinite computing power. It sounds like a totally unbeatable combo, doesn't it? Well, before we declare victory, there's a quick dose of history we really need to consider.
This quote just nails it, doesn't it? There's a pattern here. The promise of solving the market with pure math is come and gone before. Every time a new, brilliant model comes along, people hail it as the final answer, but markets always find a way to humble even the smartest formulas. The hype train can be a dangerous thing.
So this leads us to the real nail-biter. Is this time actually different? Look, machine learning models will fail at some point, just like every single model that came before them. The real question is whether their ability to constantly adapt and learn from this non-stop fire hose of new data gives them a kind of resilience that those older, more rigid models never had. That right there, that's the multi-billion-dollar question the entire industry is betting on.
We'll leave you to chew on that one. If you found this breakdown useful, we'd really appreciate it if you'd like, share, and subscribe for more explainers just like this one. Thanks for watching.